Hi guys, I hope everyone is doing well. Today I'm actually going to show you how to grow your $10 account up to $100. So I'm going to go over entries, and at the end I'm actually going to show you a risk management plan that you can follow in order for you to stay consistent. And also as a bonus, I'm going to share two setups that are actually ready to be traded. Okay, so now remember my strategy. If you by now you guys should already know like what strategy I use, but just as a refresher, like I trade support and demand and order blocks, and then I look for point of entry inside of the order block, and I trade from there. Now I trade away from the order block. Okay, so firstly it's market direction, then I find my point of interest, which is the order block. Okay, and I set my zones in the order block, and then I wait for confirmation in the lower time frame, usually mostly 15-minute time frame, and then I enter the market. Okay, so now today what I'm going to discuss is that I'm going to show you the types of entries that you actually need to focus on in order for you to grow these accounts with no drawdowns. Okay, so now we are in an overall seller's market, and as you can see I'm actually selling VIX 301S already, of which I have my first take profit here, and then I will swing the second position. Okay, so now we're gonna look at, okay, we had an impulse here, a pullback, sorry guys, I have the flu, and then an impulse, a pullback, and an impulse. Okay, and then this was a pullback. Okay, so while the pullback is happening, you can still be spotting point of interest. Okay, in this case here I have a very nice one, which is this order block right here. Okay, sorry guys, sorry, really sorry for this, but I had to make this video. So yeah, we had this order block right here. Okay, so this is an impulse of the overall seller's market. Okay, we can still sell it. Okay, we can still buy it. Okay, while it's pulling back, we can still buy it while waiting for this big move. Okay, so now I got this order block right here. Remember, what I do is I place my 0% zone. Okay, my 50% zone, and my 100% zone right here. Okay, so I have my order block, I have my impulse move, and then I have my mitigation back to this zone right here. Okay, so when the market gets inside of this zone, I'm actually looking for reversal from the 50% area. Okay, so what I do is I'll go to the lower time frame. Okay, okay, the 15-minute time frame. Okay, so already here, when the market touches the 50% line, and then I get a green candle like this and engulfing like this would already be an entry for me. Okay, entry, I get a little bit of drawdown, and then price just starts to go in your direction. But I mean, in this case, it would have been like a deep drawdown like this, but no biggie. Okay, if you open a trade right here, and then the market pulls back like this, you keep holding. Okay, obviously when you open like this, you need to cater for like if you have a $10 account, you need to open a position that can actually hold this move right here. Okay, this that can still be that can still withstand this pullback right here. That way, if market gets here, you don't blow your account. Okay, but if you decide to be aggressive and you blow your account on this, don't worry. Okay, don't really worry about it. Just wait for the market to give you something like this. Okay, you see here, it touched the 100% line, and then we had this engulfing here already. By this candle here, I would have already entered the market, but to be on the safe side, you just wait for a green candle like this. Okay, this is a morning star pattern. Okay, so you enter here, like I keep telling you guys, the synthetic indices here, they are very volatile. Like you can have $10 and you open like 3 or 4 positions here, and then you hold them all the way up. By the time you get to your target, you are up like $100, $200, $300 even. Okay, so and on the way you can be scaling up as well. Okay, so now you have your trade here. Okay, that's your trade right here. That's your entry. Okay, here's your entry. Now for target, what do I do for target is I spread my Fibonacci from the point low to the point from the point high to the point low. Okay, point high to the point low. Okay, and then my first target is always the 100% level, and my second target is the 161.8 level. Okay, and as you can see here, guys, this market, after the entry, the market went straight to our first target, 100%. Okay, and then here we had a little bit of turbulence, but eventually market hit the 161.8 area again as well. Okay, so in this case right here, there was a little bit of drawdown. So like now I'm gonna look for a trade that actually has zero drawdown to it. Okay, zero drawdown, no drawdown. Like as soon as you enter, the market just goes. Like there's no liquidation. You see, there's no liquidations like this. It just market just decides to go. Okay, so I'm gonna pick a random pair. I can even go to like step index, for instance. Okay, so this is something. Let's try to look for a point of interest. Okay, so remember, if you go to the high time frame, this is like a seller's market. Okay, and then price actually got here, and then they broke price above. Okay, but since the market is in the overall, like in the weekly time frame, you can see that it's a long term, it's a long term seller's market. Okay, so sellers are still like dominating the market. Okay, so we had a break here, then they decided to come back again. Okay, they decided to come back. Okay, I was actually looking for buys around this area. Okay, around this was an order block that I was looking at. Market actually went in my direction, but you see this order block right here stopped the buying orders, and then they just dropped dropped the price all the way down to the bottom. Okay, so now we're gonna look at this example right here. Okay, mark our order block, supply and demand, whatever you can call it. Okay, and you mark your 100%, 0%, 50%, and 100%. Okay, 50%. Okay, so now that we have our order block, okay, we had the impulse mitigation back to the zone. Okay, and you can see here the market touched the 50. Okay, now if you go to the lower time frame, 15-minute time frame, for instance. Okay, this is the order block in the lower time frame. Okay, it's these cluster candles. That one candle is all these candles right here. Okay, from this top to this bottom here. Okay, so now we have our impulse move. Okay, then price starts to mitigate back to the zone. Okay, it just touched the 100% level. Okay, and then bam, it touched the 50. Okay, as soon as it touched the 50, the first red candle is your entry. Okay, bam, here you can open 5 positions. Okay, 3, 4, 5. You saw with $10, and then you open 5 positions here, and then for target, like I told you, point low to point high. Okay, first target is 100% level. Bam, bam, bam. Market hit the 100% level, and then it went straight to the 161.8 level. Okay, so if you had held this trade all the way through, by the time price got here, you would have made $300, $400, and on the way down, you can be scaling in. Okay, you can be scaling in until price hits your final target right here. Okay, how do you scale in? Well, you use the same concept, but now you look for order blocks in the 15-minute time frame. You no longer go back to the 4 hour, because the 4 hour already took off. Okay, so you look for things like this. Okay, bam, and you can see it's the same concept. Bam, bam, bam. Impulse move, mitigation. First red candle, you can enter here, or you can wait for this close here. But at this close here, you need to cater for this pullback. Okay, but when you have a large candle like this, they usually want to mitigate. And where do they mitigate to? Back to this order block, this demand area, and then they drop the price. Okay, they drop the price. This would have been your 100% level. Okay, and they came back again to your 15-minute order block, and then they give you that red candle, and then you sell. Okay, so you would have had your entry here, and then your entries here. Okay, and as the market goes down, you look for order block. This would have been an order block as well, but did the market come back to it? We'll find out. You see, market price never went back to it. Okay, sorry, price was dropping all along. Okay, all along price was just dropping. Okay, and it's been dropping ever since. Okay, so in this case, you would have had you would have had 2 entries, 1 entry right here, 2 entry, and then you hold it to your 161.8 area, and you probably up like $300, $400 from $10. Okay, And then here we have the same type of scenario. This is a 4-hour order block. There was a mitigation right here, green candle, entry. Okay, now it's been dropping ever since. So now we are at this order block right here. Okay, we are at this, like, prices mitigating back to this order block right here. Okay, so obviously I'm gonna place what, my 50% line. Okay, easy money. As soon as price touches here, as soon as the price gets inside this area here, I'm gonna zoom into the 15-minute time frame. Okay, 15-minute time frame. As soon as it touches and it gives me a red candle like this, something like this would be great, and I'll sell it. Okay, and then for target, I'll do the same thing. Okay, point low to point high, 161.8. And where does this 161.8 falls? It falls exactly at this bottom area here. Okay, so guys, it's the same concept over and over and over again. Okay, so now that I have this out the way, now I'm going to discuss a risk management plan that you guys can follow. Okay, sorry. All right, so for risk management, say you have $100. Okay, never fund all of it and try to trade. Okay, instead break it down by 10. Okay, break it down by 10. So that's like 10 times 10 accounts. Okay, so you have 10 chances to actually flip your account. Okay, so if you take $10 out of this $100 and you lose it, you have $90 left. Then you take the $90 left, the $90 that you have, and you try to flip it. Okay, second chance you flip it to like $100 or $300. Now you have $290. Okay, then you can maybe change your risk, man. You can maybe change the amount that you wanna risk now. Okay, say you have 290. Now you can start risking like $30 per trade. Okay, so you take your $300 and then you put $30 in your account and try to flip that. And then from $30 you can start making big amounts now. From $30 you can take it to like $500, and then now you have $500 plus your initial 290. I think you're sitting at like $790. Now you can start risking like $50, $60, and then you flip them to $1,000, and so on and so forth. You know. So yeah, that's the risk management plan that I have for you. And yeah, you follow this, and that's how you're gonna start finding consistency. Instead of you like funding all of the money that you have, just break them down. So break it down and try to flip your account. That way you are growing. Understand? And then yeah. So lastly, I have a bonus for you guys. Okay, have a look at this. Okay, I have a bonus for you. Obviously, the first bonus was this. This is a free trade for you guys. Okay, and when market touches here, look for your selling signal and you sell it. Okay, and then we also have VIX 201S. You see, market is just getting inside of this order block. As soon as it touches here, actually now I should actually be looking at the 15-minute time frame now. Okay, as soon as price gets here and then it gives me some form of entry signal, I'm gonna buy it. Okay, then we have VIX 100 as well. It's approaching an order block. If I get a sell signal, I'm gonna sell it. So you guys can see, like, I'm doing the same thing over and over again. That's what trading is about. Like, this is how you find consistency. You don't need to be trading moving averages, Fibonacci here, Fibonacci there. Like, you just need to have a concept that you follow over and over again, and you never change it. And that's how you find consistency, and that's how you make money. Okay, guys, I don't want to make this video too long. I hope this video was very informative. Do not hesitate to like and subscribe and hit that notification bell. And also, I just dropped my free Discord. Whenever you guys want to trade with me, you want to follow my setups and actually profit from the knowledge that I have, feel free to join my Discord that's in the bio. Okay, so have a great trading week. I hope you guys bank a lot of pips, because I will. And see you on the next video. Peace.